Welcome back, ladies and gentlemen. Today is October 14th, 2025, and here's how I made around $950, and I passed my alpha account, creating an alpha qualified account, right, as you can see. So this is the trade that I took today. It was out of a 2-minute inverse gap plus a little continuation model to this buy side liquidity plus this 15-minute intermediate high. There was obviously London highs and then an unfilled 4-hour above, but I didn't need that much. I just needed to pass this eval, and that is what I did. So if we go to the 2-minute, see 2-minute gap right there, had a really strong closure above, entered first TP at I think a 1 to 2, 1 to 2.6, and then a 1 to 2.5 RR for the final TP. So let's go through the analysis of why I even decided to take this trade and why I entered. So on the hourly, let's go to the 4-hour. So the 4-hour chart, we were rejecting off this 1-day fair value gap, and it's bearish. So as soon as I saw this, I was instantly thinking, okay, this is going to be a bearish day today. We have new week opening gap all the way down here, and we also have this range low that we could potentially take out. Obviously, that did not happen. We go to market open. We have, first of all, a whole bunch of buy side liquidity on the 15-minute. We have this high right here, which is London high. We have this 15-minute high right here. We have this 15-minute high. We have this high right here. All of these highs that were created pre-market, and as soon as market opened, we instantaneously dumped to this new week opening gap. Now, with that being said, my thoughts were, okay, if new week opening gap gets respected, we are obviously going to push out of it higher and higher to probably, again, this unfilled 4-hour gap that was created pre-market. So what happened? We tapped this new week opening gap. ES completely swept this new week opening gap multiple times, actually, sweeping equilibrium. And we had a pretty strong rejection out of there, especially for the 4-hour candle closure, which was for NQ all the way up here. So we tapped into it. We rejected high off that. Second confluence of why I wanted to take longs after sweeping new week opening gap. The third thing is new week opening gaps tend to be like a super fair value gap. Like it is just a whole bunch of orders that didn't get filled. So as soon as we tap into it, you're going to see like wherever price rejects out of, either to continue lower, to continue higher, it's probably going to continue that way, especially with all those orders getting filled. And on top of that, with London high, these 15-minute intermediate highs, all of these, and plus again, the 4-hour unfilled gap, in my mind, I was thinking, okay, cool, we could see some trades. Now, there is a trade I did miss to this unfilled 15-minute gap, which I did see, but I did not want to take because for me personally, because I was bearish on the day, I wanted to see NQ push even lower to sweep equilibrium of the new week opening gap. Again, didn't happen, but here's the trade that could have been placed by me, which is this small 2-minute inversion right here. If I can even pull it out, 2-minute inverse right here, and again targeting this 15-minute unfilled or either of these 5-minute gaps. I mean, it was a pretty decent trade actually. We had, 1-minute gap, all of these. We had 2 decision candles, and then we just started ripping up immediately. I think Blake and Patty both took those trades, which are people I honestly like look up to as people I gain knowledge from. TGR didn't take anything. You know, he has a completely different strategy than I take, but what I would like to say to the people that missed out on taking a trade today, or maybe took a losing trade, here's what I'm going to say. If you have a liquidity sweep method or strategy, and you are missing out on trades such as these huge moves that keep happening, where it just either rips higher or rips lower, I beg you to learn a continuation model, because I mainly go off of liquidity sweeps for my trades, liquidity sweep, inverse fair value gap, SMTs, all that type of stuff. But on days where the price is moving in such aggressive ways, lower or higher, you need to have a continuation model. So you first of all don't miss trades, and then second of all, go days without taking trades. Like, I'm just gonna be honest, if I stuck with my single liquidity sweep fair value gap, inverse fair value gap, and then SMT trades that I usually took, I would not have taken a trade for probably upwards to 2 weeks because of this month. It's just because this month has not shown that up. Besides this trade right here, which is a sweep of liquidity right here, plus a tap of a new week opening gap and then rejection out of there. Maybe. But as someone who has almost been in the market for a year now, I would highly advise that you definitely have two models that you are very confident in, so that first of all, you don't miss trades, and second of all, you don't sit on your hands for too long, because then if you don't take trades for a long time, confidence drops because, again, you haven't taken any trades. But anywho, 2-minute inverse gap right here. We sweep it, we immediately come back up, inverse that inverse, and then we have a very strong 2-minute closure above there with clear targets for this buy side liquidity right here, 15-minute intermediate high and London highs. Now, what I would like to say, on ES, there was a almost clear broad daylight equal highs that, if I can find, were another reason why I wanted to take this trade, and it is right here. We had hourly equal highs on ES, and on ES, price was absolutely ripping from this low right here that was created, just ripping higher and higher. We had one downwards candle closure on the 5-minute. We just as soon as I saw equal highs, I was like, oh my god, this is perfect. Like, we have a strong draw right next to London highs, right next to an unfilled 4-hour. Like, longs are easily going to be the play, and that's what happened. No drawdown, just ripped up higher and higher. I honestly could have stayed until this 4-hour candle, 4-hour gap for even more. If this was like on an XFA, this would have been a crazy trade, right? I mean, we completely blew past the 4-hour. So, I mean, if you stuck in this trade, you probably could have taken it all the way to Asian highs, which would have been crazy. But still, really easy long play, especially with all just like all the stuff market was giving me. Like, it's just swept new week opening gap, rejected new week opening gap, whole bunch of buy side liquidity, unfilled 4-hour, London highs, inverse. Like, we were in the beginning of the day, we were respecting bearish and disrespecting bullish, and then when market opened, we were respecting bullish and disrespecting bearish. And you honestly just have to go off of what the market was giving you. And that is why personally I took a trade long, because if I stuck with my daily bias of being bearish and I try to take a trade off that, especially with what market was giving us, I would have lost. And secondly, even if I didn't take a trade, I would have just seen the most obvious long setup ever and then just stood on my hands. So 2 lessons to take out of this trade if you guys are still watching. Number 1, please learn a different model besides, like, say if you are a continuation trader, please look for a liquidity sweep trade, so it is easier for you to, first of all, take trades, and then second of all, not have to sit on your hands for days on end, which then deteriorates your confidence in the trading market. And it's just better. It's just better to have multiple trades. And then the second lesson is to not always stick to your daily bias. Look at what the market is giving you, create a strong narrative around that, and please do not go against what the trend is giving you. I thought we were going to be bearish. Market open, we were bullish. What am I going to do? We're being bullish. Simple as that. We're on an XFA now, so obviously the trade margins are going to be smaller. Probably going to be shooting for $500 winning days, risking about 250 to 400 at most until I get a big enough buffer. But besides that, again, pretty simple trading day, pretty easy continuation long model. I love and appreciate you guys, and I will see y'all in the next video. Peace out.